Stocks climb, dollar retreats as U.S. inflation slows. Wall Street stocks rose on Tuesday, pushing the Dow and S&P 500 to new records after the Senate's passage of a $1 trillion infrastructure package boosted equities. The Dow Jones Industrial Average rose 162.82 points, the S&P 500 added 0.1%, while the Nasdaq Composite dipped about 0.5%. In individual stocks, ExxonMobil and Chevron gained 1.7% and 1.8% respectively as oil prices rebounded following a plunge witnessed at the beginning of the week. Asian equities were mixed on Wednesday in anticipation of U.S. inflation data. The Nikkei 225 in Tokyo rose 0.7%, and the Shanghai Composite Index added 0.1%. The Kospi in South Korea gave up 0.3%. Hong Kong's Hang Seng was up 0.5%, and Sydney's S&P ASX 200 advanced 0.4%. In Europe, stocks finished higher on Wednesday as data out of the U.S. offered a sign that inflation may have peaked. The Pan-European Stock 600 closed up by 0.4%, with most sectors and major bourses in positive territory. U.S. inflation increased by 0.5% in July after a 0.9% rise in June, the largest month-to-month drop for 15 months. The annual figure remained at 5.4%, matching the steepest inflationary climb since August 2008. The figures offered some hope that the spike in inflation had peaked. This in turn could cool speculation that the U.S. Federal Reserve may tighten policy and hike interest rates sooner than expected. On Wall Street, the S&P 500 and the Dow Jones Industrial Average climbed to fresh all-time highs on Wednesday, with banks and industrial companies leading the gains. Healthcare was the only sector to fall. The S&P 500 rose 0.25%, the Dow gained 0.6%, and both indexes also set all-time highs on Friday and Tuesday. Meanwhile, weakness in some technology stocks pulled the Nasdaq Composite 0.16% lower. Asian shares were mixed on Thursday as caution set in among investors, with worries in the region remaining about the recent regulatory crackdown in China. On positive side, signs that the U.S. inflation is slowing help to ease concerns over an earlier than expected asset tapering by the U.S. Federal Reserve. As such, Japan's benchmark Nikkei 225 gave up 0.2%, South Korea's Kospi shed 0.32%, Australia's S&P ASX 200 added less than 0.1%, while the Shanghai Composite in China shed 0.13%. Meanwhile, the dollar retreated from fresh multi-week highs as U.S. inflation moderated in July. However, the overall demand for the dollar continues to persist, with downside risks for the euro prevailing. The euro-US dollar derived support from the 1.1700 area on Wednesday to bounce slightly eventually. However, the common currency lacks the recovery momentum, struggling to overcome the 1.1750 intermediate resistance. The major point now awaits the US PPI and jobless claims data for fresh trading impulse. In the meantime, the dynamics in the dollar and yields will continue to play out amid a tepid risk tone. In other markets, oil prices continue to recover from fresh local lows set at the beginning of the week. Brent crude climbed to the $71.70 area earlier on Thursday before turning marginally negative on the day. U.S. President Joe Biden's administration urged the Organization of Petroleum Exporting Countries and its allies to boost oil output to tackle rising gasoline prices, which they see as a threat to the global economic recovery. Meanwhile, data from the U.S. Information Administration on Wednesday showed that the fuel demand in the top global crude user is averaging 20.6 million barrels per day for the past 4 weeks, roughly in line with 2019 levels, and U.S. refiners slightly increased the amount of crude they processed last week. Other data from the EIA report showed that the U.S. crude oil stockpiles fell modestly last week, while gasoline inventories dipped to their lowest level since November. More volatile weekly demand numbers also declined. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.